Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block. And today, joining us on the other side of the mic is our guest, Paolo, the Chief Technology Officer for Tether and Bitfinex. He's been on the show before. You should know him. Friend of the show. And today, we're going to be discussing... Well, we put out a story the other day, I think it was yesterday, that maybe we've already breached the all-time high in total outstanding USDT supply. But you guys have been making a lot of headlines outside of that, the monthly Bitcoin purchases as well, the bear market performance. But before we dive into all that, I want to take a moment to thank our sponsors.
This show is sponsored in part by CleanSpark, America's Bitcoin miner. With CleanSpark, you can feel good about investing in the Bitcoin ecosystem because CleanSpark uses low-carbon energy for their Bitcoin mining data centers and is always optimizing their operations to increase energy efficiency and reduce e-waste, all while partnering with the communities they operate in. If you want to support the future of Bitcoin while also supporting the environment, visit www.cleanspark.com to learn more about the CleanSpark way.
So, Paolo, I shared the chart with you yesterday. I guess before we dive into that, thanks for coming on the show.
Well, thank you for having me, Frank.
Of course. So, Keiko had its own theory that Tron USDT is a darling among the whales. What do you think's driving activity? Because as they sort of put it, it's not necessarily translating or connected, rather, to an increase in centralized exchange volumes. What's behind this sort of surge?
Well, I think, first of all, Tron is definitely the most used blockchain for Tether, right? Without any doubts. So the reason is fees and speed in general, right? So think about it. Tether, as almost every single big centralized stablecoin, is anyway centralized, right? So it's Tether is a centralized stablecoin that uses a decentralized transport layer, that is the blockchain. So using Tether on Tron, or using Tether on Ethereum, or using Tether on something else, of course, the difference is that it will allow you to access different DeFi projects and similar. But the reality of things is that when it comes to transactions, every blockchain is the same, right? The only thing that matters is speed and fees. And so happens that Tron is the most used to transact in Asia, in Africa, and in South America, and is the clear winner. And if you add to the fact that more and more Tether is being used as a mean of exchange in emerging markets, we posted, I think, a couple of weeks ago, how Tether is growing in Brazil, for example, right? On a daily volume and a weekly, monthly is going through the roof. That happened in Turkey and in Georgia and many other similar locations for similar, not for the fact that they are nearby geographically, but because they share some of the issues on the devaluation of national currency and so on. So I think that especially when we think about the fact that Ethereum is heavily subject to fee spikes, and if we're seeing like 5 to 10 to 15 to $30 to send a transaction, keep in mind that for certain people, even like half a dollar or $1 is already too much to send a transaction, right? So I mean, so far Ethereum is not a great choice for the unbanked or the people that need they need to make many transactions per day and need cheap transaction fees, basically.
Do you have a sense of the breakdown of people using Tether, sort of the profile of user, trader versus sort of this more global south user versus maybe merchants? Like, do you have a sense of who's using it and for what?
So the data cannot be perfect because there is the fact that, for example, in South America or in Africa, there is still a lot of usage of stablecoins, in specific Tether, USDT, in centralized exchanges. Right, it could be yellow card for Africa, or some specific regional exchanges for South America, and so the data is not precise, but we are seeing from 2019 a huge shift. Right, 2019 was 99% crypto trading settlement, right, without any doubt. Kind of similar to 2020. But from the pandemic period, after the pandemic period started, then we started seeing a big shift in the usage of USDT in just holding, so store wealth, and also pure services, right? So, for example, the peer-to-peer trading app that exists on, I think, Binance and OKX and others is heavily centralized around Tether, and all the payments part is heavily centralized around Tether. So, from what we gather, I think we could say that now is around still 60% of the volume and the usage is crypto trading settlement, and 40%, that is already an outstanding number, is payments and holding on on the, let's say, global south, as you call it.
So how do you maybe or how have you as a firm pushed into that latter group? Is it organic, or are you are there certain initiatives or business plans in place to kind of further that adoption on the payment side?
So I wish we could take all the credit to have made Tether USDT successful in these emerging markets. The reality of things is that Tether has been, of course, now we have an amazing team, but historically, you know us, right? You have been following us since a long time, and we didn't have marketing until late 2021. So actually the big uptake of USDT has been organic. And I think the reason is that, again, it's not that we cannot take credit. It's just the product was useful, and you had a ton of people that were heavily affected by the devaluation of their national currency, like in Turkey. At some point, Tether USDT was the second traded currency in the entire country, even compared to fiat currencies. So that's not because we were, great guys in communicating or doing great marketing pitches, but it's just people needed an alternative to the Turkish lira in that example. Same thing is happening in Argentina. So, but now I think we, from the communication point of view and marketing, we have grown a lot. Also thanks to, our team is super outstanding, and although it's lean, is doing amazingly. And also we started developing and funding and co-founding new projects like Hole Punch and Kit. So still following the same philosophy of Bitcoin in terms of decentralization, fact that building applications that are truly unstoppable, yet focusing more on communication. We believe that we can help to widespread the adoption of both Bitcoin and Tether stablecoin products around the world, using and building applications that are UX friendly, that are looking to provide incredible utilities when it comes to building strong, resilient communication networks, for individuals, for companies, for even countries at this point. So we are super excited about this change. That's not a change of strategy, but additional business lines that are popping up inside the Tether ecosystem, because they will definitely help the I would say the hyper Bitcoinization and also the spread of Tether products.
Understood. I want to shift maybe to current events, I guess you could say, something that's been top of mind, not just in crypto, but across capital markets, global markets, is the looming potential of a default and the negotiations between lawmakers in the U.S. on the debt ceiling. If there's sort of an amount set aside for your reserves in short duration treasuries, is there any sort of risk that those treasuries might trade below $1 if the debt ceiling issues sort of continue to unfold? Is there any risk there? Or how are you thinking even about the debt ceiling as it pertains to reserves?
So first of all, we started using instruments like reverse repos and so on. It was part of our public announcement, and our latest attestation shows that in order to ensure that we have deep liquidity, we also hedge ourselves from these type of risks. We started using these type of instruments that anyway are still fully backed. On the other side, right now, by the end of this month, is roughly Tether will hold around $2.7 billion in excess reserves. Among the excess reserves, there is around 1.8% of the total reserves in Bitcoin. That amounts to $1.5 billion. That is, again, less. That is really important because we got many questions around that. That 1.5 billion is lower than the 2.7 billion in reserves that Tether, the excess reserves that Tether holds now. The excess reserves are, just to be clear, are the additional capital, so the accrued net profits that Tether holds on top of the 100% reserves that Tether holds in order to completely reserve and back all the outstanding tokens. So simply put, Tether has to have, of course, 100% of all the reserves to back all the outstanding tokens, but on top of that, Tether accrued over the last years 2.7 billion in additional excess reserves. So that money in a normal company would be distributed among the shareholders that would be happily starting buying yachts and planes and all this kind of stuff. So instead, Tether decided to keep that amount of money inside the company to further back the stablecoin, to make it the most solid thing that we have seen in the financial industry at large. So we believe, and so one of the additional moves that we made is to invest 15% up to 15% of the ongoing net operative profits in Bitcoin. I think this move in general allows us to be even further, to have even further resiliency. Because again, we could have distributed these dividends, we didn't, we keep even more money, we invest, we diversify also the type of investment that we do with these excess reserves. So, if shit hits the fan, we have gold, we have, that is accounting to 4% of our reserves, we have Bitcoin, we have 2.7 billion in excess reserves, we have reverse repos, and the maturity that we have is super short anyway. So I think we are in the best position to survive any possible black swan event that will come to us.
Is there a point at which you're comfortable enough with the risk management or the risk profile of the reserves that you can take some dividends and maybe get a small boat?
Well, we'll see. I mean, I like the fact that we invest in Bitcoin. So, but at some point, of course, the more these reserves will grow, we are a private company. So definitely, we could be looking into that. But for the moment, the only important thing is to make sure that people understand that the quality of our reserves and the product itself is super strong and super liquid.
And how do you sort of come to that threshold of 15%? What's the logic or calculus there?
So, central banks started to allow, banks to allow the bank customers to invest part of their portfolios into Bitcoin. So we wanted to be, though, extremely conservative. So 15% is amount is a percentage that is not too low, because if you invest only 5% of the net operative profits, right? Just to clarify, right? The net operative profits are the ones that are realized in cash, right? So, for example, you have 5% on the T-bills. They generate, maybe $700 million dollars per quarter. You remove the operative costs, you remove the unrealized P&L that is generated, for example, by the gold, and then you get your number. And from that number, we get the 15%. So we didn't want this. It's really important. We are not investing the portion that is coming from of profits that is coming from the unrealized P&L, because we want to be as conservative as possible. But is not necessarily a magic number. I think is a good threshold that is not too much, is not too little, that makes us comfortable. And the up to 15% is still important as an ocean, because we still want to make sure that if we feel that the wind is changing, and there is important to have for a specific period of time more, even that 15% still in cash and cash equivalents, we would keep that, right? So we are leaving us some freedom. But I think that in general it was important to be transparent to the public that Tether would also look to diversify its portfolio, because anyway it's part of the public attestation, right? So people would see the number going up, and you see if you saw the latest attestation, we started to disclosing the exact amount of notional value of gold and Bitcoin for this purpose, because we wanted to go the step further we discussed many times, and provide this additional clarity. So while we did that, it became obvious that we should also provide some additional clarity on our strategy to manage the excess reserves of the company.
Is there an opportunity to expand beyond Bitcoin to other cryptocurrencies, or is there a specific? It's sort of like a supplement to gold versus cryptocurrency, like diversification into crypto itself?
No, I think we are not interested in investing in anything that is not Bitcoin. I mean, the Bitcoin has this unique thing where if there is a thing that all the regulators around the world are agreeing on, is that Bitcoin is a commodity and is different from all the other crypto assets. For us, we don't want to speculate honestly on crypto. We want to be diverse. We want to have high liquidity, and Bitcoin honestly is the only crypto asset that has super deep liquidity. Even during the worst times of the crypto finance, like 2022 has been a terrible year for crypto, right? We had Bitcoin became almost oversold. Was started with Terra Luna. You remember that there were like these 80,000 Bitcoin that were moved around by the LFG Foundation, and then eventually sold. Then you had Celsius and then you had BlockFi, and all these, everyone was selling Bitcoins all around, and yet Bitcoin all these Bitcoin were bought up from OTC desk and market makers, and the liquidity was there, right? So that is a unique condition for a crypto asset. That means that institutions are actually stepping in buying these cheap Bitcoins from the market and scooping them up. I cannot say I really don't see the same thing even in Ethereum.
It doesn't have enough deep liquidity for you to branch out into that.
Here's a message from our sponsor, CleanSpark. CleanSpark is a NASDAQ-listed company that mines Bitcoin. Basically, they build and operate data centers with tens of thousands of computers that help secure Bitcoin, making it more reliable and secure for anybody, anywhere to use. These computers require a lot of energy, but that's why CleanSpark predominantly uses low-carbon energy to power their machines. But that's not all. They care about the communities where their data centers are located. They create jobs, donate to schools and community centers, and revitalize aging electricity grids in rural parts of America. They aren't just a Bitcoin miner. They're one of the most efficient and sustainable Bitcoin miners in America. Visit www.cleanspark.com to learn more.
What about the state of the market right now? Liquidity's really dried up. Market seems relatively sleepy. What could be a catalyst to sort of shake things up a bit? Is it just waiting on macro, which is in the driver's seat right now?
Yeah, I think this thing with the potential US default, that, by the way, I don't think will happen. I mean, it would be catastrophic for the US economy in a way, but I think everyone is sitting tight and to monitor what's going on and what will happen. I think we have seen a good rebound from 16K, 17K to 2730, but now we need to be I think the market, with the interest rates also being ramping up, that leaves a little bit of less space in general to more volatile investments, because people prefer to have a 5% that is kind of more certain, right? So now you can see that overall, apart of the fact that Tether grew in market cap, but if you see the entire stablecoin market cap, right, as a sum, it went down, I think, 20-30% from the all-time highs, because in the end people prefer to sit on their dollars and earn an interest out of it, and so that also leaves less space, less liquidity to actually reinvest that liquidity in the crypto markets. And so it's kind of multi-factor, but definitely if we are starting to see the US inflation numbers going down, if the Fed will stop ramping up the interest rates, I believe that we'll be in a situation where the market will start healing, not just the crypto market, the market in general.
Would you say stablecoin supply is a leading indicator to more robust or more bullish market activity? If we were to start to see maybe that supply inch back up in aggregate, is that an indicator that people are feeling a bit more secure in crypto?
Yeah, I would say so. Look at the TVLs of all the different DeFi platforms, right? It's a part 1 or 2. Also, the TVL locked into all the other DeFi, all the other blockchains, it's at really the historical minimum, just because there is the stablecoin supply is down, the prices are down, and in this moment, the only thing that has a little bit of liquidity remains Bitcoin. All the rest is completely dried out. And I think as long as if people and if investors will start feeling again confident, the classic medium to get into crypto is buying stablecoins, right? Acquire new stablecoins. And so we will see possibly our competitors ramping up a little bit more. And I'm still bullish on the fact that Tether USDT could easily approach to 100 billion in that case.
I haven't checked. I didn't check this morning. Let's see what we're at.
83 billion.
We're almost there. I feel like it's gonna get and then revert. No, just kidding.
Oh man, you can hear that?
Yeah, he take the other side of the bet. So. Let's maybe talk a little bit about sort of your plans, for the next 6 months as it pertains to Tether.io. What are you most excited about?
So, look, I think Tether is in this condition that is a unique spot, right? So now, for a long time, the profitability of who was holding safe assets like T-bills, but I always go back. Sorry about that. But on the commercial papers, right? So even the commercial papers we had were super safe, right? So the profitability of if you have super safe assets, especially in moments when the inflation is low, these assets will hold really a few amount of just a bunch of basis points. In our case, was between 15 to 25 basis points, up to 30 maybe, because we held the stuff that was A1, A2 rated. And so, but now that the profitability of Tether went up, it allows us to start using some of the profits to invest in, for example, energy production, renewable, of course, in Bitcoin mining. We announced a little, I think, probably 1 year ago, that we were looking at seriously at Bitcoin mining, not doing any reckless investment, really. It's not like we don't plan to start pouring billions in that, but it's just that's something that we like to explore. We like to understand really well the technology. We like to become a technological partner for all the companies that are interested in doing Bitcoin mining. We are interested to become the technological partner for companies that need and the organizations, cities, government that wants to improve their tech and communication infrastructure. That's why we focus so much on hole punch and Kit. So I think the beauty of our next period plan is that we can start diversifying ourselves a little bit from the pure stablecoin offering and become more around tech provider that acquires expertise in many important fields, right? So energy, communication, financial infrastructure are going to be the key of the next 6 to 12 to probably 48 months.
Do you think you guys could be more involved in the venture market, maybe making some bets from sort of these net profits?
We have a super conservative, in general, independently from we as a people, right? As personally, we really have a conservative approach to investments. So we, there is a joke. I come from Genoa, so my hands are not reaching my pocket, right? So if you go out with me in dinner, you should be prepared for me to say that thing is too expensive, but. Yeah, I cannot reach, but it's definitely there are some interesting companies that are worth looking at, and especially we invest in companies that are aligned with our vision, aligned with our with our philosophy. That is, we want to build the super cool technology, and that's it, right? So it's. We remain lean companies. We like companies that are as lean as us, that are like not pumping the numbers of the employees when everything goes well, and then starting to cut heads when things are not that good anymore. That is in general one of my main critics to the classic VC play. So yeah, we are kind of we are investing in companies, usually small chunks, and we don't invest in super huge companies, right? We prefer to work with startups, people that want to explore technology, rather than investing in like super big, super established companies.
It seems like the center of gravity of this market's moving more and more offshore, right? With news of Coinbase and Gemini looking to launch derivative offerings offshore, stepping into maybe the gap left behind by now bankrupt FTX. How do you see that shaping out? I mean, there's a lot at play here from a regulatory perspective. Obviously, the U.S. may be chasing people out, Hong Kong and other jurisdictions like Paris. I'll give a shout out to your Lugano as well, being a bit more open. How do you think this all sort of shakes out, and what does it mean maybe for just our capital markets?
Look, I mean, offshore is a relative term, right?
Offshore for me, not offshore for you.
Yes. Well, it's also offshore for me, but you're amazed. But yeah, I'm joking because sometimes like offshore sounds like a really bad term, but actually. We are seeing, and sadly, I think US had a ton of talent, right? So US has been driving technology for the last 30 years, right? Especially when it comes to internet, and it's all the biggest companies in the space, from Google, Amazon, Apple, are all coming from the US, right? So it's clear that US understands the technology, and so seeing the aggressivity and the uncertainty that comes from the US in terms of both regulation and banking is kind of heartbreaking, right? So because it's like a once in a lifetime opportunity for companies for a country to lead the technology, right? So has happened with with internet, and should also happen with blockchain technology. And so with this uncertainty, of course, even companies like Coinbase that always look at the offshore competitors as like tainted, they are now forced to go around and not exit entirely the US, but they have to start looking at other and better alternatives. And in the end, I'm personally glad that they are finally seeing the light. Not because, of course, they shouldn't have been in the US. Seeing the light means that the world is big, right? So it's big, it's diverse, and is full of great people all around the world. And so not necessarily should be concentrated in a single location. So now we are seeing this move, and from I think they are looking at Cayman, the UAE, and so on. So it just makes sense. But again, it's saddening that that means that the US will lose a little bit of ground. Definitely, Paris seems to be one interesting hub in Europe. I would say that in this moment, Lisbon is the one that is still leading, also because of my understanding has some interesting tax implications to be in Portugal rather than being in Paris, in France. It's almost not funny, but it's almost interesting that Hong Kong has been reopening so fast after the US crackdown on crypto, as if they are understanding the enormous potential that Hong Kong has in order to attract companies from the US, right? So it's perfectly timed if you think about it, right? So one closed down and the other one immediately opens up, like both Hong Kong and Singapore.
It is. It's actually kind of interesting that it's happening at the same time. Do you have a theory behind that? Is that coincidence, or?
I think governments are interested to capitalize. If companies are fleeing a country, especially a big country like US, if there is always interest to bring that value, that money, that talent, that intelligence and brain to your own country. And so I think it happened for, the reason why it was almost so sudden, this move, was rightfully to capitalize on the uncertainty happening elsewhere. And I think it's a brilliant move. In the end, if you are if you have the first mover advantage, or if you are able to regulate in the right way with the right balance this technology before anyone else, you will scoop everything.
Yeah, stands to reason. Well, Paolo, thanks so much for joining the show. Appreciate you taking the time.
Thank you very much, Frank, and it's always a pleasure.
The Scoop will be back for you again with another great guest. Have a great day.